All right, guys. So Bitcoin is heading lower today. We're around $75,000. We've gone as low as 74 and a half as of right now. I wanted to make this kind of emergency video to tell you what I think could happen today. We still have the U.S. Open coming later today, but a lot of the markets have opened around the world. So we have China, Japan. All these markets have opened and had some of their worst days in history. This is the HK50, China's index, down over 13% today. I believe this is its worst day in history. The Nasdaq futures are already down 5%. The the S&P is already down 5%, and we also have what is this Nikkei Japanese index down 4%, but it was down even more before. So, what does this mean for the U.S. Open today? What does this mean for Bitcoin? Well, I do think Bitcoin is probably going to touch this line, if not today, in the next day or so. So we probably are coming down to at least $71,000. I do see us bouncing off of this area because it's a high time frame level. And it's also the level that we broke out to break all-time highs. So this is a very strong and very important level here, around $78,000. I do expect us to bounce at some point, but I do think we come down here later today. So starting off, we have Crypto Rover saying global markets are imploding. The Nasdaq 100 futures open at minus 5.5%. China stock market down at 10% at open. Taiwan stock market plunges 9.8%. Hong Kong stocks more than 9%. Japan's Nikkei down 8.3%. Australian stocks 6%. UK and German stocks over 4%. Black Monday is here. But we also have Do9 who has a pretty good post saying what's happening, a long post. When Trump announced his tariffs on 90 countries, that was the equivalent of a nuclear bomb dropping on the world economy. Globalization is over. Today, Asian markets triggered their circuit breakers with fears of new Black Monday. The US next. What will happen if Trump maintains his arbitrary tariffs is a full collapse of existing supply chains across the world. Tariffs add friction to trade and destroy profit margins. Trump just nuked 90 countries overnight. Any businesses that make and sell products have to redo their business case and see if they're still profitable after last week. Even if they are profitable, they may be forced to cut costs to stay alive or increase prices. This means people get fired and productivity crashes. Prosperity is the consequence of high productivity. Friction on global trade erodes such productivity. This destruction of value is now reflected in the global markets. The longer these global tariffs are kept, the bigger the damage. Every day counts. If the US does not make a U-turn soon, then the only conclusion is that this is intentional and the damage will only increase with time. Unfortunately for crypto, this means the start of a prolonged bear market. It can last 1 or 2 years or more if a global recession starts. Those cheering for this do not understand that the US is also a loser in the game. The US is not a manufacturing hub in the world, it's a financial hub. The US prints dollars from thin air and goes to the mall called China to buy anything it wants, while the world uses those dollars to trade between themselves. The problem is that the US just nuked the global trade. Plus, buying anything from China just got more expensive, and China can decide to close the shop to American buyers and no longer accept these dollars. This is called a trade war, retaliation, and escalations will follow. This is a lose-lose game, and nobody wins. We also have the Kobayashi later saying the free fall continues. Today's drop in the US stock market futures puts S&P 500 futures down at minus 22% and in bear market territory. The US stock market has now raised an average of $400 billion per trading day for 32 days straight. Is it time to buy stocks yet? So exactly 32 trading days ago, the S&P 500 hit a new all-time high of 61.47. In the below timeline, we explain how the S&P 500 has raised over 1,300 points in 32 trading days. This is a March 2020 style decline, and sentiment has reached some of its most bearish levels in history. So what changed since last Friday? It's more what did not change since Friday, as President Trump doubled down on his trade war. Heading into the close on Friday, investors were hopeful of signs of a trade deal this weekend. Instead, it was complete silence and markets hated it. Minutes ago, Trump was asked about the stock market sell-off, and the S&P 500 is on track to fall 15% in 3 days, one of its largest 3-day declines in recent history. His response, sometimes you gotta take the medicine. In other words, short-term pain for long-term gain. Today, volatility index futures, or the VIX, are surging above August 2024 highs. This no longer looks like an orderly decline with feared extreme levels. Capitulation for a bounce is near. Another clear sign of capitulation, even the safe haven assets like gold are selling off sharply. Until Friday, gold has pushed sharply higher amid tariff uncertainty. Today, gold is back below $3,000 as the rush to the sidelines has accelerated. Again, more panic. And on Friday, between 9 a.m. and 12 p.m., retail investors sold $1.5 billion of equities. This was the largest sale over a 2.5 period in history. Retail has been adamantly buying the dip since 2022, but it appears this trend might be rapidly shifting. Combine this with the max exodus in institutional capital, and tons of cash is now on the sidelines. March 2025 marked the sharpest rotation of institutional capital out of U.S. equities in years. Retail is now joining the sell-off, adding to the already sharp decline. Ultimately, this all comes down to one key question: will Trump's tariffs stick long term? If so, a severe recession in the US is impossible to avoid at this point. If not, this is a historic buying opportunity. And also, the Wolf of Wall Street says top 5 worst 2-day stock market drawdowns ever: October 19th to 20th, the 1987 Black Monday, the Dow fell 20.5%, the largest single-day percent loss in history. In October 1929, the Great Depression, the Dow dropped 23%, the crash that started it all. In March 2020, the COVID panic, the S&P fell 12%, the markets froze as the world shut down. In November 2008, the Lehman fallout, the S&P fell 11.5%, panic over global financial collapse. And between April 3rd and 5th, the Trump thump, the S&P fell over 10.5%, markets hit by tariff-driven trade war fears. The markets crashed fast and confidence returned slow. And the last thing I want to show you real quick is this video from JP Morgan's Bob Michel, who says the Fed may have to cut interest rates before the next meeting, which is in May.
Bob Michael, the global head of fixed income at JP Morgan Asset Management, writing this: both the administration and Federal Reserve are behaving as though the market moves are business as usual. We cannot believe that the Fed will wait until something breaks before responding. Bob joins us now for more. Bob, good evening.
Happy to be here.
GFC.com, the pandemic. Frame this moment. What is this for you and the team?
Well, I was reading Larry Summers earlier, who pointed out that Thursday and Friday were back-to-back the worst market drops, except in three other instances: the '87 stock market crash, 2008 the financial crisis, and then 2020 COVID. So this is a historic period, and as you point out, we're down another 5%. I would tell you, in the other three instances, the Fed stepped in immediately and cut rates sizably. So I think for now, if you go back to Friday, the Fed can talk tough. They have to be looking at this. I don't know if they can even make it to the May meeting before they start bringing rates down.
At the same time, nothing seems to have broken yet. It doesn't seem like things have gotten disorderly yet, despite the margin calls. And there is a real concern about inflation picking back up. How much can you really reject what Jay Powell said on Friday?
Well, you have to reject something he said over the last few years. Remember, they talked about the long and variable lags. So now they're saying they're going to wait for the accident before they respond and then wait for the long and variable lags to take hold. I don't think so. I think if you step back and look at the totality of what's going on, you cannot believe that there's nothing under the surface that's going to break. We already know that businesses in the lower rated end of the quality spectrum have been struggling. When you look at private credit and look at the percentage of amend and extends, it's very high. What happens when their cost of funding just ratcheted up another couple percent, and they're going to see top line growth come down as well as their input costs go up? I think this is a serious moment. I do not think the Fed can just sit on the side.
If you do believe.
So what does this mean for the U.S. Open today? Could we have a stock circuit breaker? Well, if you don't know, a stock circuit breaker is when they automatically stop the markets in case of panic selling. So if the S&P 500 drops 7% to 13%, they pause for 15 minutes. If it drops 20%, the market closes for the day. For individual stocks, a pause if price swings too far, too fast, which is 5 to 10%. So we may see a big sell-off today in the U.S. stock market and as well as crypto. But what does this mean you should do? It really depends on where you are. Now, if you think that this is just kind of like the COVID drop, where after a couple days, maybe this week, the Fed will come out, they'll say, hey, we're going to cut interest rates. That news alone will then pump us. Maybe they'll do QE, maybe they'll start printing some money, and maybe tariffs will then also get cut. Maybe a bunch of countries are going to come out today and say, hey, we're going to negotiate. I know Taiwan is one of the countries that said, hey, we're actually going to put zero tariffs on the U.S. So Taiwan is one of the countries that seems to be negotiating as well. It really depends on what you think might happen. It's very hard to say and it's very hard to predict. And so this is an area where it's kind of hard because I don't know necessarily, what Trump is going to do, and I don't know what, your portfolio is. So it's more so up to you. If you think that, these trade deals will turn around and, the Fed will come out and they'll start printing money and it'll be similar to COVID, well, then we'll kind of get one of these V-shaped reversals. Now, this looks quick, but this is over the course of a couple months. So these are all weekly candles. This was negative 35%, the COVID crash. And then after we got relief and then, we started printing money and then everything went back up and all was good in terms of the market. To get 35% from the low to be similar in the S&P 500, that would take us all the way down to around just under 4,000. If we were to have a similar crash like the 2008 financial crisis, which was 56% because of credit and the collapse of real estate and all of that, that would take us to around just under 3,000 in the S&P 500. So we still have a ways to go in both of these cases if nothing changes right now. Do I think we still go lower? Yeah, I think we probably go at least towards 4,600 today at the stock market open because every other market is nuking. We have the Chinese market, which is down 13.5%. You know, the Nikkei, the Japanese one, was down over 10% today. And, you know, many other markets around the world were dumping. So I do think we dump unless there is something that, you know, comes out and Trump immediately reverses this today. But I do think overall, we still will dump today. It's just how fast will we recover after this. These are the different scenarios that could play out. I do see us going at least to this level in the S&P 500. And what does that mean for Bitcoin? That pretty much means this level here as well, which is around $71,500. Do I think that will be the bottom? No, I think it'll probably run through it because crypto tends to overreact. So I think it'll probably be something like this today, or if the if the S&P jumps, this will also dump through towards maybe like $68,000 to $69,000, and then reclaim and then have a relief bounce. Where it will go from here, I'm not entirely sure. It really depends on the news. But I do think at some point we do get a relief bounce because we've had so much down moves over the past couple of weeks. I think we probably get a relief bounce towards the mid 70s to maybe $80,000. And then whether we reclaim this level and then continue higher because we're having quantitative easing, the Fed is cutting rates, all that, then we can head higher if we reclaim this level around $79,000 to $80,000. But if not, we then just make a lower high and we probably continue back down. And then there's a couple more months of chop and reconsolidation when the markets need to figure out what is going on. So these are a couple different scenarios I can see right now. I do think we hit $71,000 on Bitcoin today. So we probably come through here and then maybe we reclaim, and then over the next week or so, maybe there's some good tariff news and we come back up to $80,000. If it's really good news, we can then continue higher if we reclaim this level. But if it's not that great news, then maybe after this huge bounce, we then dump back down here and we reconsolidate in the 60s for a little bit or for a while before going higher. So it really depends if you think this is more like the COVID crash or if you think it's more like the financial market crash. It's very hard to say what will happen for sure right now, but I'm just giving you a couple different scenarios so you can keep this in mind. For Ethereum, like I thought we would come down to this level, but we blasted through this. Ethereum is one of the weaker coins. So now we're falling through this level of support. I would not be surprised for Ethereum if we come down to this next level of support if the market sells off today. So somewhere around 1,200 for Ethereum. It's not looking the best for this coin right now. It's lost all these major levels of support. This is really the last one, and we didn't even go that much lower than this during the bear market of 2022. So if we can't hold this, it is not looking good for ETH, but I don't expect us to just blast through this level and head into the 3-digit ETH. I do expect us to hold somewhere around here, maybe come down here, but we get a bounce. But yeah, Ethereum, not one of the strongest coins, not one that I would really touch. I would just kind of avoid that one right now. Solana, we are in 2-digit Solana territory right now. I do think we probably come down towards $80 to $85 today for a Solana. Crazy to see a Solana at 2 digits again. But like I said, it's very hard to do long-term TA. TA in the short term is very easy. Long-term TA on things that are very driven by macro news, a little bit harder to do. So these are just some of my scenarios. I do think this is going to take a little bit to play out. I think it's going to be a slower process than we want. It's not going to be an immediate V reversal. So I wouldn't go using all of your money to buy the rest of the dips right now. I wouldn't be buying here at $75,000 because we're kind of in the middle of nowhere. I'd be waiting towards we get down towards $71,000 if Bitcoin is what you wanted to buy and you wanted to buy it somewhere around here. Bitcoin is one of the stronger assets and probably one of the ones I would be buying on any dips. But like I said, I think it's going to be a bit of a process. We don't usually just V reversal off of nothing. We can V reverse if there is some crazy new shift in the Fed's policy or some crazy shift in tariffs. If tariffs all of a sudden got canceled and everyone in the world, canceled tariffs, maybe we could V reverse. But I think this does take a little bit to play out. So I don't want you to get fully destroyed just buying the dip immediately right here and then it keeps dipping and then it plays out, because in this market, we've seen a lot of time-based capitulation where prices have gone sideways, Bitcoin's gone sideways for a while, and altcoins have just fallen off a cliff during that time. And because of that, people just capitulate altcoins, obviously, because it just keeps going down. So time-based capitulation is a big thing in this market. It's a lot better to buy this reclaim once we've shown strength than it is to just buy, as a falling knife as we're going down through this market. Because you don't know when it's going to bounce. So I'd rather wait for it to come through here, reclaim this level, and then I'll buy this little reclaim right here and then go higher. But that is just me. But the last time we had this volatility get this high was when the whole Japanese yen carry trade was unwinding back in August of 2024, where it got up to around 65 on the volatility index. We're at about 60 right now, which is massive. And the last time we were at this before that was COVID in 2020. So we are at a very high level of volatility. It's not a place that I would be doing any kind of leverage trades. It's a place that I'd be doing spot buys if you want to be buying. A lot of this is based on what happens on the news today. But these are a couple of different scenarios. I do see us going down towards $70,000 in the next couple days at least. So that is the video today, guys. I want you to be safe out there. I think it could be a pretty bad day in the stock market and the crypto market as well. So don't use a lot of leverage. We're going to have to see what happens with the whole tariffs this week. I'll be keeping you guys updated. But yeah, unfortunately, this has not been a great week or a great weekend. But we will come out of this a lot stronger, and the markets always continue higher. It just might take a little bit of time. So I'll see you guys tomorrow.